published 11/11 Est, the 22nd of November 2017, updated 1845 Est, the 22nd of November 2017. The Chancellor launched a new tax crackdown on firms moving cash overseas today, unveiling new rules on internet giants and multinationals. Philip Hammond said he would extend the so-called Google tax to cover new tactics employed by search giants to shield revenue made from UK users. The rules could extend to multinational firms like McDonald's and Burger King as profits are moved around the world to reduce tax bills. The new change will mean Britain can collect revenues on activity carried out in the UK even if they are redirected via a third country and not just straight to a tax haven. Other reforms will mean online marketplaces such as Amazon and eBay are held responsible for paying VAT when sellers on the platforms do not collect and pay the tax. Chancellor Philip Hammond announced an extension to the so-called Google tax, which allows the Treasury to collect tax on profits made by internet companies on activity in the UK but via systems based overseas. Treasury sources hailed the innovative and novel change, designed to tackle a new tactic employed by internet firms to add an extra leg to redirecting activity offshore. They said it would help address growing public concern in the aftermath of the leak of the Paradise Papers revealing mass offshore tax avoidance by the rich and famous. The new measures on offshore money allows the UK to exploit bilateral tax agreements with more than 100 countries to lay a claim to the revenue, raising more than £800 million in extra tax over the next 5 years. Philip Hammond today revealed he would make online marketplaces responsible for paying VAT when sellers on the platforms do not collect and pay the tax. Up to £1 billion may be lost each year due to such tax evasion by sellers on eBay and Amazon alone, according to an April report by the National Audit Office. Dominic Stutterford, European head of tax for law firm Norton Rose Fulbright, said the law needed to be updated to tackle such problems but that the actual impact was unclear. The new VAT measure is expected to raise around £30 million a year. Amazon did not respond to a request for comment and eBay declined comment. Changes to VAT policy on online marketplaces will drag in another £50 million a year by 2022, budget papers reveal. The new tax applies, for example, if someone carries out an internet search in the UK using software based in the EU and channeled via a tax haven. When ex-Chancellor George Osborne set up the tax, it was aimed at searches carried out in the UK via systems based directly in the tax haven. Announcing his changes, Mr. Hammond told the Commons today there is a wider concern across this House and in the business community about the tax system in the digital age. Along with the innovation and growth that it brings, digitalization poses challenges for the sustainability and fairness of our tax system. But this challenge can only be properly solved on an international basis. And the UK is leading the charge in the OECD and the G20 to find solutions. Treasury sources hailed the innovative and novel change, designed to tackle a new tactic employed by internet firms such as Google. File image reforms established by George Osborne allowed HMRC to collect tax on revenues earned on UK digital search activity even if it was generated via software working offshore. More small firms are set to be dragged into paying VAT after the Chancellor froze the turnover threshold at £85,000. The move is better than some feared amid rumours Philip Hammond could have slashed the rate. But the Chancellor will face criticism for increasing pressure on small businesses. The change will earn the Treasury £15 million next year and £55 million the following year. Companies, including search engines such as Google and social media firms, got around the new tax by running the activity via a third country. The source admitted the third country could collect the tax themselves and stop it being returned to Britain, meaning revenues decline over time. But they said the Treasury hoped the internet firms would be forced to effectively onshore activities taking place in Britain anyway. The source said this is not a silver bullet for all of the public's concerns about the digital economy. There is much more to do, but this is a sensible and pragmatic measure. Mr. Hammond also said he would hold online marketplaces responsible for paying value-added tax, a form of sales tax, when sellers on the platforms do not collect and pay the tax.